One of the points that I always used to like to make when I was a senior contributing editor at Better Investing, we would put out the top 100 every April, was that you really shouldn't pay so much attention to, what we have held, because that's kind of an incomplete piece of information. It's just one piece of information. We hold it. A more powerful piece of information is what are we accumulating collectively, that wisdom of the communities type concept. And in this case, what we do is we basically take a look at how many dashboards were these companies on back in March, how many are they on now, and these happen to be the 3 companies that have, on a percentage basis, have arrived on more dashboards here in June. And the 3 companies are TEVA Pharmaceutical, again moving from the number 10 slot to the number 5 slot, and that's huge. Apple has moved up from 12 to 8, shows up on a whole bunch of dashboards. And then BioReference Labs, and in fact that's the one that has moved up the most on a percentage basis. It's one of the companies that Cy Lynch picked for the roundtable a couple of times, and the price has been a little bit sluggish, and we can talk about that a little bit also. But the pictures down there for Teva, and A is for Apple, and I mean that everybody knows those 2 companies. The Teva is the generic, one of the largest generic pharmaceutical companies in the world, and Apple. Everybody knows Apple. I just love the picture of the Apple II computer. That was one of my first. Some of you probably remember this from the early 1980s. Just a really cool machine back in those days, and the launch of the company. And for those of you that are less familiar with BioReference Labs, that's what the CSI picture is for, just to kind of characterize that as it's the non-sexy version of CSI. This is a company that if you've ever done blood work or had blood work done or analysis of body fluids, I'm not going to try to get too graphic here tonight, but that's what they do, and they do it predominantly in the New York area. And I believe that Ken Kavula shared that they've actually been awarded a government contract for a whole bunch of prisons. So they're branching out of the New York area, but again, this is what they do. It's lab work and forensic type stuff, and predominantly in the New York area. So that's how I tend to remember them and characterize them. Here's what the Manifest 40 looks like on a dashboard. I've actually chopped it off and sorted it by projected annual return so we could focus on the companies at the top. One of the reasons that I want to do this is I just want to get visual confirmation that the companies that are at the top end, again, that's where we want to focus our shopping efforts until it gets too wild and crazy up at the top. And lo and behold, the companies that have been accumulated more by our community here in recent weeks and months, Apple, BioReference Labs, and then jumping down here over Cisco to Teva, yeah, I think it's clear to see why they are capturing our attention. Again, we're talking about companies with really interesting growth rates. Again, coming out of the recession, Teva very well positioned. Take a look at some of the other characteristics. The only one that kind of sticks out a little bit is, yeah, Apple's a lot more less predictable. How's that for bad grammar? It's less predictable than the others, but we're talking about a high financial strength ratings from all of them, and they appear to be intriguing shopping opportunities based on these elevated projected annual returns that you see over here on the far right. So they do rank among companies that, after going through some analysis, we as a community are finding some interest in them. So let's go ahead and tackle that forensic lab out of New York, BioReference Labs, and just take a look at some of the key characteristics. Back around the Christmas time countdown, I actually characterized what we do when we do fundamental analysis of companies as a 3-step fill-in-the-blank process, and Lori loved it. I got to find a picture that we can tell the story with, but kind of a 3-piece jigsaw puzzle where we focus in on 3 major milestones. What is the growth characteristic of the company? What's the profitability characteristic of the company? And based on those 2 things, we then build a forecast using a reasonable and considered price-to-earnings ratio, PE ratio. Well, in the case of BioReference Labs, again, some of you mid-Michigan people out there and some of you that have caught the disease nationwide are out there literally humming or chanting to yourself up, straight, and parallel, because this is one of them. This is also further evidence that you can have a relatively small company BioReference Labs is still a relatively small company that illustrates up, straight, and parallel. Yeah, there's a little bumpiness here, a little bit of bumpiness back in this time frame, but in general, those two are drawing a pretty nice straight parallel line, and you get some feel for how much the price fluctuates around by the price bars. Using our convention at Manifest of embedding a couple years of analyst estimates, and we watch these pretty closely because they will impact the trends up or down, and we like to keep track of that. So when you're following a company and you get a downdraft in these numbers, you want to see how it impacts the long-term trend for the company. But I think as all of us sit around and look at this company, we have a pretty easy time convincing ourselves that a growth rate somewhere in that 20% neighborhood is relatively okay. It's a little steep, it's a little dicey, but this is a relatively small company. So basically we audit, put it through the gauntlet and say, yep, if you really want to be fussy, you could say 18, but 20 works for us. How's the profitability of the company? BioReference Labs, over the last several years, there's a little bit of up and down, but keep in mind your scale over here on the y-axis is only going from 4% to 7%, so it's a pretty tight spread there, so it's going to make it look bumpier. I could make it look absolutely flat if I did 0 to 10. So again, ignore the bumpiness, focus in on what's been going on lately, and I think most of us in the room would look at that and say, well, yeah, it's basically been in that 5 to 6% range over the last several years. It seems to be kind of steadying out. These are forecasts here for 2011 and 2012, so the analysts are calling for results that have been similar to these last couple of years of actuals, and the nutshell is somewhere in that 5 to 6 range. You call it 5.5 if you want. I mean, you wouldn't be out of line. I think you could convince almost any investment club in the nation that 6 is not science fiction. It's certainly not impossible, but I think all of us are more comfortable with building in a little bit of downside. So if we go with the 5.5%, that certainly seems like something that has been delivered historically. So the only thing left, now that we have the company nailed down, we have those two and entered them in here, 20% for the growth rate for the company, 5.5% for the profitability going forward. We basically impose that on the business model analysis we know as an equity analysis guide. Over here on the left-hand side, it's a present-day snapshot of the company. We're talking about a company that is basically a $500 million company today with 28 million shares outstanding. Again, the current or trailing 12-month situations here for sales and earnings are depicted right there. The stock price, this was actually sometime either yesterday or today, delivers a PE ratio of 18.5. So 18.5 with a net margin that's somewhere in that 6% range. So it's certainly consistent with what we've seen over that last 10-year picture or so. So again, if the company grows at 20%, it becomes a 1.2, 1.3 million or billion-dollar company in the future. If they continue to achieve those traditional type margins with 28 million shares outstanding, we're talking about a 5-year, again, this is always a 5-year time horizon, a 5-year earnings per share forecast of 248. Got to get a better Madden device here, I think. My mouse is misbehaving, but that says 5 years. So the 5-year forecast for earnings per share is in the 2.5 range. And again, we've filled in the first of those two blanks. Like Lori says, a 3-step process of filling in the blanks, 20% growth, 5.5% profitability. And just looking back over the track record for PE ratio, taking a look at the value line forecast, and playing around with embedding either Morningstar or S&P numbers, building a consensus, this 21 seems to make a lot of sense. So we're talking about a company that could be a $50 company 5 years from now, 52.14 to be precise, and that would basically be nearly a 20% annualized price appreciation from the current price level. So we're looking at a company with basically a projected annual return of 20% or so, and it certainly explains why we're seeing so much interest from the community for CSI New York. One of the things that Herb Lemkool and Ken will always remind us to do is to, let's not only just take that elevated return, but let's make sure that we we follow what we believe, and we attempt to invest in the best, look for leaders. So at Manifest Investing, you can actually click on any company, equity analysis guide, and then also click on the industry. In this case, you see the medical services industry. Now, there's a whole lot of companies in a whole lot of different businesses here, but it's the medical services subgroup. And you can see that I have actually sorted this by quality. So the higher ranked companies are up at the top, down to these are all excellent at the top, along with a few good sprinkled in here just to make the point. BioReference Labs checks in at this number 4 position. Again, decent return, excellent returns. You could actually do one-on-one comparisons with, it's not a completely valid direct comparison, but Laboratory Corporation of America is one, but the really solid direct comparison is to Quest Diagnostics. Chances are you may have actually had some of your hospital work or your physical work go through Quest Diagnostics. They're kind of a nationwide company. Question, Lori, or a comment?
Yeah, actually, John Kimmel was asking about that. He wanted to know if there was if anybody knew if there were any poison pills or other obstacles to BRLI being acquired by one of those 2 companies.
I don't know. Does anybody in the audience know whether or not BioReference Labs has any protective measures, which can sometimes be not necessarily in the best interest of shareholders, unless you happen to be one of the shareholders that owns the entire company. And sometimes that can be the case. One of the things that we might check, I'm just punching it up to see if it shows up on the value line report. It doesn't jump off the page as to how closely held this company is, but we could check that. But unless anybody in the audience is aware, I don't know. I'll jot the question down and see if I can dig up some information on it, share it in the forum. Anybody else have any thoughts on that, Lori?
No, John just says to ask you to check it out.
Ask you, okay. We could definitely check it out. And the reference is to Hugh McManus, one of our roundtable participants, and I expect Hugh will actually be there for the roundtable on Saturday morning coming up. So again, you can do a more direct comparison between BioReference Labs and Quest Diagnostics, and you can see that Quest may have a little bit higher margins, a little bit lower growth rate, but they compare pretty favorably. Those 2 quality ratings are essentially equal, and they're both excellent. But again, just as a reminder, check the industry, make sure that you are dealing amongst the best companies, and attempt to go shopping, amongst the best in any group that you're studying. So I'll go ahead and add that question. I will ask you and see if we can't get some additional information on that and on the short selling question. Maybe we can drum up some conversation on what we might glean from that or what impact that might have. Anything else, Lori?
Philip Cross just mentions that their free cash flow looks choppy in Toolkit 6.
Free cash flow looks choppy. I have not looked at that. Again, that's something that we could take a pretty quick look at. I pay more attention to their cash flow from value line, and I know it's not free cash flow when I'm doing analysis before I dig in any deeper, and that doesn't look very choppy to me. So chances are we may have some normalization or something going on there that would need to be explored a little bit more deeply. But I will add that to the list and take a look at it. Anything else?
No, I don't think so.